Welcome back to Wyckoff Labs. Today I want to go over another trade that I've done, this time in Apple. I used my 5 minutes and a 1 minute time frame. I did a few more mistakes and I want to go over them and analyze them so I can understand what I did wrong and see how I can improve for my next trades. I will see you after the intro.
Studied the tape till my eyes went red. Every loser taught me, every win kept me fed.
Alright, so here we have the 5 minutes. We are gonna go over the trading range and what happened here before our trades, and then we have our trades right here above. We will talk about the good parts and the bad parts. But let's go over the chart. First is first, we have a very big push down with a very strong stopping action right here. An automatic rally as a change of behavior and a secondary test that is higher low than the stopping action. That together with the next push that is stronger than this other one, a secondary attempt to go down and again higher, it tells us that the phase A right here has a lot of buying power. Is that going to imply that we're going up from here? No. So having buyers here does not say that we're coming up and this is an accumulation, but it's a very good sign of strength, and we have to see what follows after that to understand if this is an accumulation or a distribution with a lot of excited buyers at the beginning. All right. Next, phase B, we have just very little sellers. This is a small trading range, a distribution that pushed the price down back into the previous support. And here is what we see. This support again is higher than the previous low. Good sign. More aggressive here on this volume, comparing it to this volume, so not a lot of sellers. So some sellers are coming here extra. And with this volume, where a lot of volume is actually hidden demand. And then we are seeing the demand in this area. All right. Now, these first 3-4 volumes going down, we see some supply, but then we see a lot of stopping action right here. And we are realizing later that the stopping action was favorable and pushed the price into this area, the previous selling zone. All right. Another push down. Now let's look at this push down comparing to this push down, this one, and right here. And we are seeing how supply exhausts, right? Much less aggressive and very low volume. And then, last but not least, the distance of the previous low is very big. All right, those signs is giving us a lot of good odds that we are going up from here. As I don't trade the open of the market, I was looking at the open of the market here, this first bar, and I just waited to see what is going to happen after. Many times the market opens and it just turns around. It wants to trick us, and that's why I wait for a few minutes to enter. But as I was waiting and I was looking the second, third bar, the fourth bar, I started to see some strength. Now, again, this looks a pretty good trade. A little bit late as what we are seeing where I entered in this area, comparing to all of these points that I could have entered. This is about $2-ish. But it's not bad. But now I want to go into the 1 minute time frame, because it's gonna show a few more extra things, and I traded the 1 minute, and those are the points where I want to improve. All right, let's see this. So this is what we have here. We have a tiny trading range right there. All right, it's not perfect necessarily, the lines, but just for the idea. And now look at my entry point. 1, 2, and 3 points. Good. First entry point. It was after a push up and then an exhaustion of the sellers. So in that case, would be okay to enter. But I saw the volume, and the volume was indicative of a lot of supply. So I would say that this entry was not a good entry. The second entry came down into the support, pushed up, all right, and then the last attempt to push down is where I entered. A much better entry point than this one. Now, the second entry point for me, if we're looking into the character, I was hoping to get something back like this. But we are seeing that this upsloping trading range is actually a trading range, and it could be indicative of some distribution. We're gonna see a little bit later at this local, or some stopping action at a higher scale. All right, last, I wait for this push down. It comes right into this area, this hammer, where we are seeing the demand pushing the price up, and I immediately enter again into this area. Good. I do think that the third entry point was much better than both of them, and this was probably my worst entry point. Let's talk about the exit. So, in order to understand the exit, because the exit was a little bit close, I want to understand what really was running through my head when I was doing the trade. One, a lot of volume here. Some sellers are coming in, and this was after my trade, but some sellers came in here. All right. We have this push up that actually was the best of the push until here, not this one, but these two pushes. So that's where my point of entry here was, all right, we could have this as a phase C and push up. It didn't happen. And then what I saw in the last rally is that actually it didn't just happen the way that I expected as a phase C and to push up, but it exhausted more than what was before. So in other words, we are gonna go sideways or push down. Now, a couple more things. Again, huge demand. That this is not demand. This is mostly, well, it's a 50-50 because of the bar itself. 50% demand, 50% supply. So it's some hidden supply here, much bigger than everything else what was in the area. And here, same thing. Look where it goes. Look the next one. No, actually that was the last bar. So this is the bar. And immediately a huge bar here. And actually while I was in the trade, I did not see the volume of this one. I think I was on the phone or doing other things, and I did not see the high volume of this one that was alerting me to get out. I did want to get out a tiny bit higher, again, a 10 cents-ish, but I waited for this drop. As soon as it came below this first bar was my exit. A little bit late, but not terrible. Next, let's do the evaluations. Remember, there are 6 points of evaluation, and then we are going to decide if this was a good trade or not a good trade and we should improve. All right, the first evaluation is the bias. The bias, I was expecting to go up, and it did go up until some point. I was expecting probably a little bit more, but that ends into the character that we're going to talk in a second. So I will give the bias 100%. Timing. Timing, if we are talking about this specific trade, this one, then it will be pretty good. I will probably give 100%. But my first entry point, even if it was right here, I should have seen the supply coming in. So this for me was a bad trade, a bad entry point, and I should have just not trade this, probably wait for it. Right here will probably be a better point, but it didn't happen. So timing, because of these other 2 points, I will give myself a 50%, but hesitant. All right, let's make it a 50%. Now, character. Because of this push up very strong, we had here the entry, and it was one of my thoughts. Then the second one, and the third one even more, because of more volatility coming in, more demand coming in here. I was expecting for the character to show up. And the character, not that just stopped, but it had a lot of signs of stopping action, and I did not see that. So in other words, character, it's a no. 0 points. I should look more into the volume and what happens in order to determine of the character what's coming next. Good. The next one is the point of entry. And point of entry, it's very similar to what we had in the timing probably. This one, not good, good, and really good. So I will give myself a 50% here. Stop loss. I don't really like to move the stop loss, and I will say that I'm a little bit lazy to move the stop loss, but this was one of those trades that I kept moving the stop loss. Let me explain. My first stop loss was somewhere here, if I remember well, somewhere here. Okay, good. Did not touch, kept pushing up, did not touch, kept pushing up. But after each push up, I will come into the next level. I will come into the next level and the next level, and when I was about to see my exit points, I start moving my stop loss higher and higher and higher. So I would say that was a really successful trade on the point of the stop loss. So I will give myself 100%. Exit. This bar, the one that we talked about, the last bar right here, showed a very high increase of supply, hidden supply. And if we are looking from here to here, what was somewhere here, probably the last one again, I should have seen that supply is coming in, and I should have not wait for this huge bar to get me out. Honestly, I was trying to get out somewhere here, and my idea about getting out was just that this is not very strong, so it's not a phase C, and we are getting closer to the resistance. And I was just like, okay, get it out and done. But pressed wrong buttons. I did something, it just didn't let me get out, and I was capable of getting out into this red bar. Anyhow, I do think that that's a late exit, so I will give myself again a 50% here. All those together adds up to a 58%. And for me personally, everything what is below 65% of analysis, it's a blunder. So even if I made some money here, moving up, this was not a good trade overall. And I should improve the character prediction and the point of entry with the timing. Those 3, I would say that will be the most important things to improve. The exit, I gave myself a 50% and I could have done better, but let's blame it on the bug itself and work on the most important steps. Alright guys, so that's it for today. If you want me to analyze one of your trades, send it to the email on the monitor right now and I will analyze your trades next videos. Thank you and I will see you next week.